Oh man, today was a crazy day in the market, everybody. We have a lot to go over here. There's some new data that you really need to understand going into the next couple of weeks of trading. But again, it was an absolutely awesome trading day today. If you guys did make some money, 1348 gang, make sure you guys comment down below what your plays were, what you guys made some money on. It was an absolutely awesome day as usual. But again, before we get into all of that information, guys, if you do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who do want to learn. You're not going to find this stuff anywhere else. We're going to break down some of the most important market data that you guys need to understand going into the next couple of weeks. And there is a very important and interesting opportunity for a gamma squeeze coming up. But what you have to realize is that gamma squeezes happen in both directions, and that is something that everybody needs to be aware of. So again, guys, make sure you guys hit that subscribe button down below, and let's get right into it here. So going over the basic chart of the SPY right now, kind of giving us an indication of what we need to understand according to just the basic technicals here. Well, we are hunting this daily 1348 crossdown. Remember, this is the most profitable EMA crossover strategy as studied by many different sources, and we are about to get another put signal. Now, the previous put signal, we saw a very significant decrease in the overall market of about 16.29%. So these put signals on the daily time frame for the SPY and the call signals, these daily crosses, are incredibly important to keep an eye out for. Now, the other thing, RSI below 50, we're seeing MACD showing this bearish momentum here as well. The shaft trend cycle is also signaling sell as well. Now, we do have a couple of levels of support here that I do want to keep in mind, but when we talk about this gamma squeeze that we have coming up, we're going to get into a couple of the other key levels as well, but they're going to line up with some of the levels that we're looking at on this chart right here as well. So again, we have this key level of previous resistance turning into most likely new support at right around 393. Now, the market over the last couple of basically trading days over the last 2 weeks has topped out at that 431 and then started to make that move down right in line with what we have been saying. Now, again, when you think about kind of how to take advantage of these moves here, remember, Pythagoras, our trading algorithm, we talk about it as being the most powerful tool that retail investors have at this current time. Not last week, but the week before it started going short and then is now raking in all of the gains. So again, guys, if you are interested in kind of learning how to take advantage of this marketplace right now, make sure you guys check out that link down below. It's the best place to come and learn how to trade the algorithms, Invictus and Pythagoras, all of the curriculum videos, all of the live streams, all of the alerts on stocks, cryptos, multiple different time frames, stuff for people with 9-to-5 jobs, day traders. There's something for everybody. Make sure you guys check that out. But kind of getting into some of the other things that we need to talk about with this market right now. Again, the overall market not looking good. What we have been talking about is a little bit of a potential relief bounce before we end up seeing that 400. But again, we cracked it today and started selling off through. Now, one of the key things that I want to go over with you guys is something that happened on the 5-minute time frame here, and we have to go back to these two candles right here. This was the first crack of 400, and if you were on the live stream with me this morning and kind of have been watching all of my videos recently, we've seen that price will almost try to trick a lot of retail investors sometimes. So this is something that we called out. Most likely we're going to see that flash down below 400, and then it's going to come right back up in kind of a little bit of setting a trap for people to start entering into these put contracts. The problem is that the next 5-minute candle was very aggressive to the downside, signifying aggressive sellers are now present in the market. Now, there's a couple of reasons for this when we come over here and we take a look at the target rate probabilities. Let me just refresh this page really quickly, see if we can get that most accurate update here. There's a 74.5% chance right now that the Fed is going to be raising interest rates at the September meeting by 75 basis points. Now, that's more of a hawkish stance from the Fed coming out. And we've talked about this a couple of times that, again, the Fed has really kind of stuck to their guns and said, well, they really want to stick to their mandate in getting inflation down to that 2% target. So they're going to continue with these rate hikes, and that's kind of driving a lot of fear in the market right now. But what we need to talk about right now is this interesting situation going on with the derivatives market essentially in relation to the overall market here. So when we take a look at this page, total market gamma is often the metric that most people are familiar with. Studies have shown that when total gamma is above zero, the markets tend to have smaller price distribution, essentially less volatility in the overall market. When gamma is less than zero, the price distribution widens out substantially, and we estimate a negative daily average return. Said in other ways, things get more volatile when gamma is negative, and not necessarily just volatility, price spikes up and down, but pretty aggressive moves to the downside. So now what is happening right now? Well, when we come over to this article right here, it goes a little bit through a little bit of what's been going on with Powell in the negative gamma. The jury was definitively in, and Powell did what was broadly expected, renewing the Fed's hawkish vows. This leaves equities exposed in the next few weeks as they continue to be heavily tied to short-term rates. Specifically, the real peak Fed funds has a very tight relationship with the S&P. Real peak Fed funds has risen lately, including 21 basis points on Friday with Powell's speech, but the S&P has lagged the move so far, suggesting more equity downside is in the cards. Now, when we take a look at this chart right here, we have just touched that negative gamma territory. We can pull this up right here. We're just slipping into that negative gamma territory right now, which again, as we have just shown, is going to lead to not only more volatility, but a little bit more downside as well. Now, the other thing that we have to think about here, as the market falls short expiry, close to the money calls see their delta rapidly fall to zero, while puts struck further out of the money that dealers, essentially market makers or option sellers, are short, see their delta rise. Now, this is where the delta hedging in the gamma squeeze comes in. Now, this doesn't just happen on stocks that we typically like to talk about, like stocks that can make these aggressive moves to the upside. Gamma squeezes can happen in both directions. This means dealers switch to having to sell in order to hedge after the market has moved lower, increasing the risk that the market moves are reinforced. So seeing these big aggressive moves to the downside below 400 here, when we take a look at the monthly expiration date for the S&P 500 right now, the ETF SPY, and we see exactly what's going on with the open interest here. Well, at 400, there's 152,000 put contracts. That is a very significant amount that you could easily see a very significant amount of delta hedging happen across the board. Now, coming down a little bit further, we've got 55,000 at 395. Coming back over here as well, there's 97,000 at 390. We see 109,000 at 385, and continuing down, and also at 370, 162,000 put contracts. Those are the contracts that they're talking about right here in this previous article. Those deeper out of the money, short time to expiration puts, that deltas are going to be increasing. Now, essentially what happens here is that as price starts to move down, or even if there's a gamma squeeze to the upside, as price starts to move up, there's a little bit of a self-fulfilling prophecy. As price moves down, deltas increase on the puts and more hedging needs to happen. So more short volume or selling pressure comes into the overall market, pushing prices down to that next big strike where there could be a lot of options there. But again, even on that way down, you're increasing the deltas on those now further out of the money puts. So what we're in for going into September, like I've talked about and explained to you guys over the last 2 weeks in multiple videos, is a lot of market volatility and most likely pretty significant drops. We called that kind of 430 top there. We did say the likelihood of kind of flashing above 430 and then rejecting back down was very, very, very high to create that little bull trap. As people were thinking there could potentially be a breakout, and now we are right back to 397. So we're going to continue to update you guys with this and give you guys the type of information here that you guys are just not going to see anywhere else broken down. And again, guys, that is kind of going to wrap up this update here with the amount of volatility that we are most likely going to be seeing going into typically one of the worst months of the year. So again, that is going to wrap up this one, guys. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to come to the best place to learn how to trade, that link will be down in the description and the pinned comment as well. So guys, other than that, I'll see you in the next one. Peace.